We're looking at earnings all week as they've been coming across the wires. Today, we're going to be looking at the oil and gas sector and also the industrial goods sector. Kicking off with BOA Cement. They actually reported earnings that showed revenues up 90.5%, 876 billion. Cost of sales did climb by a higher pace, 108%. Gross profit, 63% growth, 300 billion there. Profit after tax, 6% growth, 73.9 billion. Over to Seplat Energy. They also reported pretty healthy earnings for fiscal year 2024, 1.6 trillion. Now they report in dollars converted, but 1.6 trillion naira, they're 137% increase. Cost of sales, again, like BOA, rising by 170%. Gross profit, 103% growth, 710 billion. And their after profits, or rather after tax profit, at 214 billion for the company. I'm going to dive into both of them, starting with Seplat. But happy to have Mr. Muktar Mohammed, CEO of Finance with Muktar, on the show. Good morning to you, sir. Thanks so much for being with us.
My pleasure, Rotos.
Good to see you. Let's start with Seplat. If we look at the breakdown of the revenues for that 1.6 trillion, about 88% of it came from crude oil sales, by 11% or so from gas. With Nigeria being a gas giant, are we leaving money on the table when you see revenues like that from players in the sector?
Exactly, Rutos. When I saw that result, I was saying we are talking about new energy, and I thought that was clean energy. That was where we should be going to. Yeah. I'm surprised that the result about 88%. And recently, with happenings around global economy, I thought we should be taking advantage of our gas sector, which is very, very much untapped, even through that result. Yeah. So I think they still have a lot of room for improvement for Seplat, and that means they need to do more. If 88% coming from crude oil sale, and what it means is that with the current price of crude oil seems to be going down now, then that means in the next maybe next quarter, year end, they might not get that kind of profit any longer. So they need to improve in their gas sector of the business. I think that would do a lot of good for the companies and for the shareholder, especially when you have a president now of America that is thinking of low oil price. Is already we're seeing crude oil go to about $70, and I think at the time they release this result, if you look at the result, crude oil was about $80 per barrel. So they need to do something fast and see how they can improve production. You could also see that most of they've not really tapped into that divestment from
the mobile assets
really well yet. And so maybe they are looking at that to see how that could also help them in the near future. But I think 88% coming from crude oil sales, with the current challenge, they need to do more.
Look, you go through financials all the time. When you see cost of goods sold rising at a faster pace than revenues, gross profit was still positive. Any cause for alarm? Because I think with them, cost of sales was up about 170%, while revenue was up about 137%. So what's your take? Does it give you any cause for alarm?
I think it will give cause for alarm because, again, ordinary cost of sales should be lower than profit. Yeah. So that means you are putting in so much money to get, so much money and getting lesser profit because you're talking about cost of sale. So you're looking at various issues. So I think they need to do more. But again, remember, you shouldn't forget that they are coming in from that asset acquisition. Could have been the reason behind that high cost of sale. Yeah. That's what I think should be the reason, because if you look at their financials over the year, it has never been like this. I'm sure they're trying to tap into that asset, and it involves a lot of expenditure going forward. But again, the good news is that despite that, they were able to be profitable. But it can't continue like that. There must be, because you can imagine if cost of sale was even at the same pace with revenue, that means it would be a huge profit for them. Yeah. And also, it could also be trying to tap other aspects like the gas sector, also trying to expand on that. That could also be why the cost of sale is high.
Yeah, gas exploration is expensive.
That could be why the cost of sale is high. So they need to look at that and begin to really see how they can bring down cost of sale. Yeah,
you mentioned the mobile acquisition. Now let's talk about assets, because you mentioned asset acquisition. So total assets now from 3 trillion in 2023 to 9.8 trillion. How do you feel? How do you feel about more indigenous oil and gas companies in Nigeria making these acquisitions from the legacy international oil companies?
That's what excites me. Yeah. When Nigeria begins to own the life. Like Chika and Bonu will say, you say the blood of the economy. Yeah. So definitely when you start owning the blood of the economy, then that shows that we have ownership of the economy, which for me is very, 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 very good.
Yeah.
And I think we've seen the development, and they seems to have the financial might to even begin to exploit it, and that for me is also key. You are beginning to see Nigerian oil and gas sector become global players, starting from Africa, Europe, and then going to Asia, and also going to the Caribbean. Owando is there managing leasing for a refinery now. Arada is in Angola also, and then you have also Seplat also getting those huge divestment from Mobi. So for me, I think it's good for the Nigerian oil and gas sector, especially now that we even have the local refinery here. So a lot of positivity in the oil and gas sector. If there's anything this administration will take credit for, is we've been able to bring more local players into the blood of the Nigerian economy, which is the oil and gas sector.
Now, the well, two questions in one here. This March of 2020, this was a 600 naira stock. It's now at 5,700. Is there any more upside? Is there anyone who feels they've missed out? What would your reaction be to that? And then also, sorry, stock hasn't really moved much. This so far, this is still at 5,007. So yeah, what do you make of that?
I think that tells you why should I be buying a stock at 5,700? Yeah. That's the most expensive stock in the exchange at the moment.
Right.
And so definitely it's for high net investors. And the challenge is that they don't have a lot of these Seplat share in float. And so that's also a major challenge. And despite this fantastic result, you think they're turning up. But the dividend yield is quite a little bit small, because we are talking about 4.3% in terms of dividend yield. But again, attractiveness of it is you are going to be paid in dollars. So definitely supposed to hike it. But even despite these results, the Seplat is still on full offer. So a lot of people trying to dispose, and no people are buying it yet. I think that's where the challenge is. But to say the price does not deserve where it is, I think it deserves where it is now. But again, in getting investors, because we are having what we call in investor, we call comparative analysis, whereby you look at, should I be buying this when I can buy an Arada that is there, I can buy an Owando that is there, I can even buy a Total that is there. When I look at the revenue, I mean in terms of payment in dividend, between what Total is paying, what Seplat is paying, what Owando is going to pay, what Arada is going to pay. So you look at that comparable analysis, and you are not so much excited. You say, look, there's more potential, like you talk about the upside. There's more upside in an Arada moving to 1,000. There's more upside in a Owando moving to 150. There's more upside in Total moving to 1,000 than getting a Seplat move to 1,800. I mean, it's already 5,000, move to 10,000. So.
Exactly. Got you. Okay, let's move to the industrial sector, to cement. Earlier in the week, we're looking at Dangote Cement. I want to look at BOA Cement now and their earnings. And it's a similar observation with Seplat with respect to the cost of sales for BOA, rising about 108%, while their revenues climbed about 90.5%. So what do you make of that? Similar?
I think BOA own, I think, is thinking of expansion. If you look at the BOA Brown, it's very difficult to get a BOA Brown in the southwest. I think they are trying to expand their outlets to other part of Nigeria. I think that's what's responsible for it. If you go to the north enter the northeast, you see a lot of BOA Brown there. But if you go to the southeast, southwest, it seems to be dominated by Dangote Cement. I think they're trying to expand their growth, and so you are talking about trying to improve in your sales, so that will come with a cost. I think that's what is definitely raising those costs high. And also not to forget that also the exchange rate volatility is still there in terms of improvement to get these sales, maybe more output and all that. So those are, for me, good challenges, especially when you are still in profit. But again, when you look at BOA Cement, with this result, you've not seen any positivity from the market, because the dividend payout is not so exciting for investors, about 2.02 kobo, and then the dividend yields are just probably 2-point-something% in terms of dividend yield. And when you look at the kind of profit they make in terms of retail earnings, also that they have been keeping all through the years, you expect them to pay investors good dividend. Nigerian investors are always excited when they get dividends. Not so much about the capital appreciation. No, the capital appreciation is there, but they are more excited when they get this dividend. It comes, especially in times like this, cash is king, and liquidity is king. So when you compare that with what you see in Dangote Cement, paying or about 30 naira in terms of dividend payout to its investors, and also having a negative, somehow negative earnings compared to what they are paying. I mean, earning per share of 29 naira, going into your reserve to get 1 naira to pay your investors 30 naira. That also will excite investors, and investors will say, okay, this brand have the confidence. I mean, this this brand want to excite them, have the interest of their shareholders. I think that is where the challenge is with BOA. Then you look at Lafarge also, the same poor dividend yield in terms of dividend yield. But with Lafarge, you know, there's this takeover brand that is, might happen, might not happen. So that also, that's not making BOA so excited. I mean, investors so excited in taking up BOA Cement.
Thank you for that. BOA's cash and cash equivalents fell about 62%. And I think you're talking about trying to move into other regions. What do you make of the drop in their cash haul for the company? I
think it's maybe due to expansion. We've not had a conference call as regard that, but I think it must also due to expansion. And again, that's where investors also will really want to look at, because you are talking about the liquidity of the company, and also might be affecting shareholders from if this continue in terms of. So it's definitely most of those things that investors are also looking at. But I think most of it is driven towards expansion. Like I said, they are trying to become both national. Look, when you look at Dangote Cement, they are not just looking at the locality again. They have gone international. So I think he's also thinking of bringing in more plants around Nigeria also. You must not forget that the BOA refinery is also being built at the moment. Maybe it could also be BOA refinery that comes with the cement side and also with the petroleum side of it. So this could be most of the challenges that they have attributing to what they're saying. But again, it's still a good stock in terms for long-term investment. When you look at the company itself, the priority of the government is all about infrastructure. They are going to play a key role in that going forward. And the price still look reasonable, okay, comparable to Dangote, their other peers. Outside of Lafarge, they seem to be the second cheapest in that sector after Dangote.
Okay, perfect. You've preempted my next question. So I'm not asking you to pick stocks though, but I'm just saying when you assess the industrial goods sector between these three players, you've gone in depth on the dividend side. You've now talked about, BOA Cement's future expansion plans and so on. So how are you assessing if you want to look at your portfolio of stocks and you want to add the industrial goods? Are they generally attractive from your point of view?
They are, especially when you look at the priority of the government, the budget. Ordinary in other developed countries of the world, I want to know how a sector perform. I will look at what's the government. So government are the largest spender in any economy in the world. You want to look at where they are really going to spend a lot of funds, and then you look at that sector. And then with the type of road we are building these days, it's not the normal road that goes with the bitumen and everything. You see the cement are really playing a key role for the elasticity, I mean, the longevity of this road also. So definitely, I will pick them as one of those stocks that I will want to have in my portfolio, especially when I'm thinking of government policy, then I'm thinking of long-term profitability, because there's a lot of room for expansion, there's a lot of room for growth. And then when you look at the FX challenges that they have gone through over the years, and looking at the stability of the FX now in terms, I mean, I don't like saying it's called stability. I like saying the corridor of that stability. Today is 115, tomorrow it's 150, next tomorrow it's 1,515, 1,510, 1,000. So when you look at that corridor, comparable to where they were last year, when we were seeing FX at 1,800, 1,900, so that tells you that there's a lot of value in these stocks, because again, they are not reporting those large FX losses like they will. And so going forward, you will see that definitely the Naira will stabilize one time, and it will not stabilize at 1,900. Definitely, we're looking at the corridor of 1,400, 1,500, and maybe we'll have that long stability at 1,300, 1,000. That would be good for this sector. And so that is why, if you want to play this sector, you must also think long term.
Fantastic. Now, okay, let me expand the conversation. I'll ask you this several times, just to remind viewers, what other sectors do you like on the NGX? Sure, financials will be there.
Financials are always there, but let's leave the financial. Let me say one sector I like again. I think the communication sector.
Okay.
Yeah, I've seen the result from MTN. If you look at that result, you think it's a loss. You see, oh, huge profit. I mean, loss in terms of devaluation. But you are not looking at where they are coming from. They are coming from a loss of almost $1 trillion to a loss of about 400 and something billion. and the exchange rate. And then you are not looking at also what was the cost of call and data at that time, the increment there. It's not reflected in this result that just come out. So definitely the communication sector is one sector I will be looking at, especially MTN. I'll be looking at it because there's a lot of upside potential. Hopefully when the first quarter result comes in, you begin to see those potentials. And they say the good investor is not the one that sees it when everybody is seeing it. Right. It's the one that sees it when nobody is looking at it. I think that is that sector to look at. Then you look at the brewery sector also. You will see those impressive numbers from Champion Brewery, from Nigerian Brewery, from Guinness. So that's a sector also to look at and begin to pitch your term there. Because the price, the PE ratio, the price from a negative shareholder form for Guinness, from a negative shareholder form from Nigerian Brewery to a positive shareholder form, that shows that their cost of funding, borrowing is not there any longer. And that will have impact on those both companies. And of course, like you said, the financials. You've seen those numbers come, those stocks trading at low compared to where they were some months ago. So it's a very huge opportunity for investors, because what we're seeing, the investors are already pricing in what they think should be the dividend that is coming in there from these sectors, from these banks, especially when you look at the first tier bank. But again, investors will now begin to see the potentiality of good dividend payout and capital appreciation when those first quarter results begins to come in. And what we normally see, unless it's changed, is that once you have that result, the end of the year result that normally will come in the month of March, then immediately you have that first quarter result that seems to determine the direction of the financial sector. And with the kind of funds that these companies have raised over either a right, either they finish their right or they're about to go for their right or a public offer, there's a lot of potential in terms of divestment, and they're not creating holding companies. And so there's a lot of opportunity, and these funds will be put in those sectors. And if you ask me which stock is one of the most cheapest stock in the banking stock at the moment, I'll tell you Access Bank. See, it looks so attractive, so cheap because of one. If you look at what every other contemporary other banks are planning to do, Access already way ahead of them in terms of expanding to Africa, in terms of acquisition, in terms of new businesses. So that's a stock to also put your eyes on. And then tier 2 banks, don't forget Fidelity Bank, FCMB, they look very attractive. Even Sterling Bank look very attractive for investors at the moment. So the key is that the financial sectors are normally the key driver of the Nigeria economy, especially the stock exchange. Once those results begin to come out, it begins to tell you the direction of the market all through the year. And that's why you are seeing the red we've been seeing for the past 3 days is due to what is happening in the financial sector.
CEO of Finance Week, Muktar Mohammed. Always a pleasure talking stocks with you on the show. Thank you so much for your time. Really appreciate it.
My pleasure.